Good morning, everyone. Welcome to our Wednesday morning trading session, halfway through the work week. Just get the screen share going on. We're looking at the NASDAQ, of course, on this monitor. I'm also following gold and crude oil on my other monitor. But I would be happy to pull up any market you are interested in, so please don't be shy. Okay, we're starting the day with a huge opening gap. Trading left off way down here, actually, around the 53.30 mark. Asian session, sort of quiet. The European session, however, steady rally, and we end up opening way up here around 53.70. Close, not exact. So we've got a huge 40-point gap below here. It will be interesting to see whether or not the market tries to get into that gap, or whether it's just going to continue rallying. Here on the Raptor, what time is it? Oh, we are about 4 minutes into the session. We do have a soft edge sell. Let's see if we can get a second push on this one, or hopefully it won't just run away. Come on, give me that second push. That might be all I'm going to get for a second push. Nope, there it is. So the second push entry, all that means is we allow the signal to engage, and then we see where it's reacting. The idea is that we only get into the trade if there's some renewed momentum. And I'm going to take the two contracts on this one, even though it is counter trend. Very often counter trend trades, I will only take a single contract. But we'll see whether or not we can. Oh, look at that. Just tag me on the low, and now you're going to bounce. All right, so I'm just making a couple notes in my journal. Oh, look at that. Now we're coming back with a with trend signal with a hard edge buy. Yeah, good question, Steve. Steve asks, why did the markets jump so much last night? Couldn't tell you. Could not tell you. A lot of people think, they were waiting on the president's speech. Maybe it was what the markets were expecting. The markets are all about economies, right? So long as traders think that the U.S. economy is stable, the markets will continue to rally. Now, personally, I think we are setting up for a correction. I think we're running on vapors, and hold on here, I will show you why. Okay, so here's a NASDAQ, a daily NASDAQ chart. And, we've been looking at this chart time and again. We have a near perfect channel. This one's going to end up in a textbook somewhere. It's an extreme wedge. The market is just crazy strong. When it's like this, however, it does tend to have a period of correction. You can see, and I don't subscribe to the Fibonacci time sequence, but you can see that even if you just look at normal market behavior, if you plot corrections, see how the distance in days, how the corrections almost line up? That one came a little premature. But look at where we are here. We're a little bit overdue now, aren't we? Or even if I take it from the low of this candle right here, we're still a little bit due for a correction. And again, this has nothing to do with Fibonacci time sequences. It's just the nature of the market that will seem to rally or move in a trend for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. About 20 days, and then we'll see a rally or a little bit of a reset. So about every month, well, we've been rallying certainly since the end of January, all of February, and now we are here into the beginning of March. So that's why I think the market is due for a correction. However, until we get below this trend line, until we get below some of these lows at around the 5,300 area, we are still technically in an uptrend. And when the correction comes, I don't expect a full-blown, the sky is falling kind of correction. Although that's what you're going to hear on the news. But I do believe we will see the stock market give up a few points, which is what the stock market does after all. Maybe some profit taking or whatever the case may be. And that would be enough to send prices a little bit lower. All right, here we are just hovering above the break-even target right now. I will enable my stops, and I think I'll force this to break even. You can see we're just one tick shy. Of hitting the auto break even. Instead of getting me 15 ticks, I've got 14. If I had entered on the hash mark, well, I would have got my break even. That's a pretty good observation, Steve. Stephen writes, the problem is the higher the price, the lower the volatility. It sure seems that way, doesn't it? Like, we've seen the market rally and there be plenty of volatility, but you're right. It is almost as though the buyers have got to fight tooth and nail for every tick higher, and likewise the sellers. And there's decent volume going through here. You saw some orders there for 39, 40 orders. Yesterday's highs 53.50. So that's going to be the first obstacle on the way down. And we do have a primary resistance, or pardon me, not primary, secondary resistance line at 53.52 and a quarter, so just above that neighborhood. Hey, come on. I just flirting with the break even. Don't you dare. It's not the only market though. Crude oil also very dismal. When have you ever seen a crude oil chart like this? Just so congested, so sideways. Crude oil market opening 6 a.m. my time. We are almost 20 minutes into the session and we've only printed 2 bars. That is a serious sideways range. And gold not doing too much. Here's gold now on the Falcon, or the Raptor, pardon. Quick little reversal here, a few ticks higher. Steve number 2 says we've got manufacturing stats at the top of the hour, so that's going to influence the market a little bit. And we took a break-even stop out here. Yesterday, the market did not really unwind until the afternoon session. The morning was a lot like this. Oh, way to go, Clayton. Clayton, a little bit smarter than I am this morning. Clayton says, I used your $50 per contract profit idea, which is what scalpers look at for a profit objective. He says, I rolled my stop in once, I had it, and was stopped up for $110 profit on the number 2 signal. Nicely done, Clayton. Well done. Yeah, Steve says it's not the volume, but the volatility that's important. And volatility is one thing we are in short supply. Okay, a very makeshift cloud crossover. It hasn't truly happened yet. We're back into the hard edge here on the Eagle. Had a first micro-macro cross back here on the Hawk. Might be able to piggyback on that order. So what I'm doing here, obviously this first micro-macro cross signal never found its profit objective. So I'm looking at imitating that trade. Look at that. As soon as there's no surprise today where the support and resistance levels are, where the buyers and sellers are at. They're getting busy right down here. They're looking for the breakout. They're bouncing it back. Got to get back below this low here, back below 53.55. And then I think we'll be all right. All right, let's put that on the shelf for the moment. Might be working a rule of three signal here in the Eagle. We've got a couple of breaches of the hard edge. We have a late filter entry signal here in the Falcon as well. The late filter entry signal occurs when the filter goes out of sync, comes back into sync. The trend line never changes color. And you do have an opportunity, or a good opportunity, for a second push on this signal. Clayton's asking, my Raptor filter hasn't changed red yet. Why do you think that is? It's probably because I keep forgetting to turn mine back to 12 instead of 10. I'm getting really good at selling the lows today. comes a little more selling pressure. Boy, oh boy, what a crazy kind of day today. Craziness. Shoot. Well, I didn't really get a second chance at that one, did I? Yeah, you know what? Well, Mr. Buckaloo, you are absolutely correct. He says, isn't that a red bar buy signal there on the eagle off the hard edge? Yes, it most certainly is. And that's part of the problem. We were trading off the hard edge. I was trying to get a little bit cute, looking for a breakout lower. Never got it. And now we're seeing just a huge rally again. Wow. I really thought they were going to try to turn, well, obviously, I was short. I really thought they were going to try to turn it lower. Yes, Clayton is asking, or in so many words is asking, does the filter need to be in sync with your signals? So for instance, if you get a number 2 signal to short, can you short that on a blue band? Most definitely. Don't worry too much about the band. Look at the band more as a momentum indicator. So what I mean by that is, and I'm going to have to go back quite a few days to find you a half-decent example. We have obviously bearish momentum here, and then all of a sudden we get a little bit of a bullish break. that's okay. But then look at how the red bands start to get a little bit smaller and the blue bands start to get a little bit bigger. That is suggesting a momentum shift. So if you use the Raptor filter that way, rather than, oh, it has to be in sync for the signal to produce, I think it will serve you better. So right now, if we're looking at the momentum, we've got strong bullish momentum, a little bit of bearish momentum, and then the bulls came right back, and you can see the bearish momentum waned because it's smaller than the previous block, and now all of a sudden we got a lot of buying pressure again. And I have a feeling that red bar buy signal, which was actually our first in sync signal of the morning, has found its profit objective. Yes, it has. Did it work out yesterday as well? Oh, it did too. So there's the first in, or actually, here's the first in sync. No, sorry, pardon. Rule of three signal right here. So that would be the first in sync signal, and that fell off nicely. Then we had a rule of three go the other way into the close, and the market moves the opposite direction. We haven't focused on the rule of three for a while, so let me just review it for you DTS owners. The rule of three occurs, it's the counter trend signal in the eagle. It occurs when the market is in trouble, when the current trend is in trouble. It's a reversal signal. Because it is counter trend, obviously you first need to have something resembling a trend. Then what happens is the market starts to breach the hard edge and prints counter trend signals. So we've got a bullish band, but we're producing sell signals. Normally it's on the third signal that the market will commit, and that's why it's called a rule of three. However, sometimes you will get only two signals. Other times you will get four signals. I don't really trust a rule of three that gets 5 or 6 signals. That's kind of stretching it out a little bit too much. So how can you tell when it's time to commit to the market? Before a rule of three is complete, you need to have a test of the extreme. In this case, the extreme is the high. You get the test, you get the failure. That tells you it's time to commit to the trade. Here we have a downtrend. The market starts reversing. We start printing counter trend signals, one signal, two signal. Here's the retest of the extreme. In this case, the extreme is the low. And it comes back and it produces signal number 3. There is your buy opportunity right there. But remember, you have to have those two things. Don't go, looking at your charts and saying, well, darn it, all these rule of threes are working out. But sometimes, oh, here we go. Okay. Don't go looking at your charts and saying, oh, I've got 3 counter trend signals, I should short. 1, 2, 3, I should sell. No, because this market is really, really sideways, isn't it? There's no defined trend here. There's no trend to reverse. Yeah, Tony says just when the guy thinks he's got this figured out. Yeah, there's nothing like trading to humble you, that's for sure. I hate coming into a day with a bias. I'm bearish today, and I'll tell you right up front. I think I'm going to be better off as a seller, and that's going to taint my opinion of any buy signal I get. And these are usually the days that end up costing me money because I refuse to believe that the market can rally. And here we've just got a huge rally. Oh, man. And we have a first micro macro cross printing. The one to the short side failed. What is this one going to cost me to be wrong? Chances that this is going to fill before the market actually commits to the next leg up is pretty remote. These double taps on the eagle are pretty strong too. It's almost like it's a double bottom. You'll find that when you go through your chart, I'm not going to find another good example here. This one's pretty close, I suppose, where the market doesn't really make a new high, but it kind of reinforces the low. So here's the first micro macro cross printing now. Oh, brother. So even this first micro macro cross now is having a hard time getting going. It's starting to fade a little bit into a macro pullback. Oh, wow. We're stuck now, kind of at the high of the morning. See, we're getting some support here around the 53.68-ish zone. Clayton says, use the mouse, use the mouse. Which way, Clayton? Oh, Clayton's long. All right, here, we'll give it a little bit of a nudge. Get up there. Come on, get going. We got this macro pullback here. We'll give that a little tickle. Tony asks, or he's writing, assumption, you're trading a larger account. You have trade manager set at 1%. Do you take a trade for 6 contracts? Do you still leave a large stop? Even though you can afford the loss, it would be a big loss because of the number of contracts. Well, technically, 1% of your account is never a big loss. Yes, the dollar amount might be a stinger, but if you're trading, a $300,000 account, yeah, you'll take a $3,000 loss, and that is certainly unpleasant to be sure, but it's hardly going to put a dent in your account. That said, you do need to be comfortable with the amount you are trading. So if you're trading, like I say, a $300,000, $500,000, $600,000 account, you don't need to risk 1%. If those kinds of numbers make you uncomfortable, dial it down even further. Dial it down to a 0.5% or a 0.25%. I was dealing with coaching a trader. He was trading a $300,000 account. He would routinely risk a 0.25% or less of his capital. Well, you just have huge, huge staying power when you're trading like that. But, if the market is obviously reluctant, as it is today, I will dial down the risk amount as well. I may throw a onesie in, or just a couple of contracts if I'm trading a larger account. Just to, be able to participate in it in case the market makes a dramatic move higher or lower. But at the same time, if it doesn't seem to have any rhyme or reason to it, then I certainly don't want to be on the wrong side of that trading equation. All right, so we're getting a little bit of a bounce now off of the highs of the morning. So you see the market drifted below here. Tried to stay below here, a little bit of a reaction. If this comes back now with a sell signal, I think we're going to see a number 2 develop. Jeff asks, are there cheat sheets for the Eagle and the Hawk? You know what? I haven't labeled the Eagle one yet. I do have them ready for the Falcon and the Hawk. The Raptors kind of moved to the front of the list right now, but I do have the Eagle screenshot. I just haven't gotten around to labeling it. And before you guys pester me for the Raptor cheat sheet, I'm doing some Raptor videos, which will explain all the signals a little bit more thoroughly. Well, Clayton, if you're long, you may want to get your stops a little bit cozy here in case this latest move fails. You can see the Geiger counter starting to pull here to the short side a little bit. And a little sticky on the sell side. Oh, look at that. We're even getting a number 1 signal crossover buy. All right, so we're getting a trend change signal here in the Falcon. We're working the macro pullback / first micro macro cross in the Hawk, and we're producing a cloud crossover signal on the Raptor. So overall, everything looking a little bit bullish. I'm having a hard time bringing myself to buy. I'm sorry. It's probably going to cost me another couple $100 to short, but I am a little stubborn that way. My wife always telling me I'm stubborn. She spells it S-T-U-P-I-D, however. Crude inventory out in a few minutes here. Just a crazy, crazy range. I don't even know how I want to bracket this. It is so, so tight. Ay, 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 ay. All right, well, what if we looked at the overnight here, did an OCO, we'll run an insanely tight stop, and I'll buy on a break above. Oh, I need to set my stop limit ticks. I'll give them 3 ticks. Now this is how much slippage I'm going to accept. So I'm going to buy stop limit above the resistance area. I'm going to sell stop limit below that swing low. It looks like it's sort of in the middle, does it not? Yeah, Steven says, my wife calls me stupid and fat. Aren't those good things? Yeah, I thought so. I can't repeat my pet name. And we do have a few ladies in the room, so please don't take offense at our remarks here. I know not all women are that way. All right, so we're set up for crude oil. This market, I don't know. It's just, do I have a second to look at the NASDAQ again? All right, I'm expecting a number 2 signal to print here. I know we have the cloud crossover. I'm expecting a failure and a retest of the lows. There you go, I've said it. All right, we're a few seconds into the, or away from the crude inventory. All right, crude inventory should be coming out any second now. Well, there it is, a couple of ticks to the upside, not quite what I was anticipating. Oh, wow. Oh man, somebody poked the market with a stick. Let's go. I don't think I've ever seen an inventory release like that. We're sure there's crude inventory today, are we? I mean, they didn't change the date on us. Yeah, there it is, crude inventory. That's crazy. All right, I'm going to scrub the order because there is no volatility in the crude oil market today, so I'm going to pull that out. Wow. All right, boys and girls, we're going to hang with the market a little bit longer, but if things don't shape up soon, we're not going to have another trading opportunity. You can see everything just very congested once again. Yeah, good question here from Daniel. Dan's asking, what happened to the market yesterday to cause that really quick drop? And that came in at 11:10 Central, so a little after 9 a.m. my time. This one right here, just first thing in the afternoon. Honestly, I don't know. I didn't research it to see what was going on. But yeah, that was a dramatic move lower. Now the thing, with the news is the news always fits what the market does. News people like to think that the news drives the market, but the actual fact is the market drives the news. Sometimes the market will just make a dramatic move because Goldman Sachs thinks it's a good buying opportunity. The algorithms on their trading computers fire, and then they'll buy whatever, 1,000 contracts, and boom, up go prices. And this, by the way, is we've got a number 2 ready. We haven't printed the signal yet, though. So to answer your question, Daniel, I don't know for sure what caused it. But it was an obvious break of a reasonably strong support area, right? The market had been contained within this kind of range all morning. Or you could even consider the opening range like that. So then we saw the breakout, the retest, and the recommitment to the downtrend. And then they just cut loose. Whatever buying was going on down here, they obviously overwhelmed the buyers. But even if you missed that move, you did get a chance at a much smaller one, but still it's a profitable one before the close. Oh, way to go. Daniel says, I got 20 ticks from the Hawk on that move. Nicely done. Yeah, the Hawk would have fired a little bit earlier. $20, that's a good run on the Hawk. Well done. You can pat yourself on the back for that one. Right now, we're just waffling on either side of the market. Oop, wrong button. Hold on here, I'll find it. There it is. We're waffling on either side of the market open. This 53, 69, 70 area, this whole region through here. Kind of skewering the day. I still can't help but think we're due for a move to the hard edge. We've tested the extreme, but I guess they're just not up to my way of seeing things right now. Wow, just crazy neutral kind of day. Oh well. We'll leave that alone for now. Okay, so we've got a couple macro pullbacks here. You can see we're starting to turn over on the Falcon a little bit. Into yellow bars now. Here on the Hawk, we might see a red bar buy signal that we can try to fade. Wow. don't know what to tell you. It's crazy. Yeah, Clayton, I agree. Clayton says it looks like a failure setup here on the Raptor, but I guess the parameters were not quite right because we never got our number two signal. Oh, way to go, Peter. Maybe I shouldn't be watching the Russell. Peter says, Eric, I had some great trades on the Russell today with the Raptor. Yeah, the NASDAQ certainly isn't moving, but neither is gold or crude oil, which is odd. Usually one of them. All right, well, we'll put that back on the shelf. Oops. All right, gang. I'm gonna have to close up the trading room here for today. I've got a presentation to do at the top of the hour, and well, we'll get back together tomorrow, and hopefully things will shape up a little bit by then. Nope, it's just not going to cooperate. All right, I thought maybe we were going to get a number 2 signal here before I left, but it's not going to play out that way. All right, everyone, have a great day. I really think we need to see a reset here, but the market is not cooperating, so be careful. We'll talk to you tomorrow. Bye for now.